Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐑𝐄𝐔. We talk about investing, finance, and professional development. It's the current time of 9:38 a.m. on the Eastern Time on July 26th on Tuesday. Hope you guys have a great week so far. ETHEREUM closed at $1,392, about 3.28% so far. Respect over crypto market and the equity market, across the spectrum, I would say on the crypto side is sliding off a little bit more severely in comparisons to obviously the equity side. But on the equity side, it's not doing so well either. It seems like there's a lot more severe sell-off across a lot of the small cap, high growth stocks, which makes sense as we are seeing more volatility. And across the spectrum, if you look at just on a high level index perspective, which is just agnostically putting all the stocks together, on all the indexes, Dow Jones, S&P, NASDAQ, seems like they're not really moving a lot, but they are actually moving quite a lot if you look at it selectively. Down across the spectrum, 0.5%. The 10-year yields is also dipping as well at 2.714% at the moment. And across the spectrum, obviously, we are anticipating the results from today FOMC meeting that will be durating until tomorrow. And I think the speech, on the confirmatory signal on what rate hikes are we going to be going with, what's the outlook going forward, what's the tactical plan that Jerome Powell has for us going forward, is still uncertain at the moment. But as we are stitching all the evidence or the supplementary factors onto what will look like tomorrow, I think across the spectrum there's been a lot of negative news so far. It's just like counting them one by one. It seems like IMF has slashed the global GDP forecast as the economic outlook looks gloomy and more uncertain going forward. And some of the issues that they've laid out, and this is not like new news, if you may. This is like relatively regurgitation news, repeating what it is, which we've been seeing so far. With a slowdown on the home price purchasing due to just inflationary pressure, higher interest rates, so people are more reluctant to be investing into real estate at a higher debt cost. In addition to that, obviously natural gas, and obviously gasoline, petroleum products has also hit a relatively high level since 2008. Due to the Russian-Ukraine war that we're still in at the moment. In addition to that, I'm also seeing some negative news coming out from some consumer and automobile companies. So GM, General Motor, seems like with respect to the recent earning has fell short compared to Wall Street expectation because supply chain challenges seems like it's still a big issue. It's denting his profit, and this is not applicable to just GM, but to all the other auto companies in the market. And then another really worrisome one is with respect to Walmart. Seems like their earnings have really surprised Wall Street, knowing the fact that they are retail giants. But this is not like a super surprise, but this is something that is quite logical actually. Seems like all the consumer goods are, prices are rising due to inflationary pressure. To buy a pound of chicken breast cost like $3, $4 before. Now it costs like $6, $7 at selective grocery stores. And now you think about that in across all the goods that Walmart or Target or Whole Foods or whatever they sell, it will cut into their margin. Number one, right? They will make less profit from that cut, because they also have to buy wholesale wise, right? But in the opposite side of the spectrum, as consumers as well, firstly we have to pay a higher cost, but because of the fact that it's higher cost, we're more reluctant to be buying, in comparisons to be when we were like trading at a normal time frame. So it seems like just a lot of negative pressure. Another one that seems like another pretty terrible one is Shopify. It seems like the stock has not been catching any breath. It seems like Shopify have already dropped like 75% so far. It seems like have sank is sinking another 15% after companies say that they will lay off 10% of the workers to hedge against the inflationary pressure. So Shopify deals with the the online commerce side of the house, right? It seems like despite people staying home because of COVID or whatever, shopping or just consumer retail buying activity has just shrunken across the spectrum. And then the last one that's this is more just a foreshadow news from economists saying that the Feds could surprise the market by being very aggressive with the confirmatory signal tomorrow. I don't really know what that means, but seems like the 75 basis point was not working, right, from the last FOMC meeting. So as we are shifting on to potentially doing 75 basis point again, or 1% altogether, as we get the confirmatory signal from Jerome Powell tomorrow, can be impossibility. So that's a big warning sign. So across the spectrum, I would say today, nothing has really, there's no positive news so far based on what I'm seeing, right? So we'll see, right? But ultimately, the technical has been telling us the whole time. You might hate me for it, or you might love me for it, depending on what side of the spectrum you're looking for the dip, or not looking for a dip. You want to see your portfolio to be going up, but I do see some short-term volatility, right? So let's just dive right into the technical to see what's going on. It's recording time of 9:45 a.m. on Eastern time. We are selling off from obviously the 1450 that we were lingering on for a little bit. We broke the previous support of 1550. So as we are heading down to a next level of support, right? So the level down will be 1350. And then the next level down obviously will be 1250, right? And at the same time, you could see that clearly we're about to form a death cross. We are lingering on at 51 out of 70. So ideally coming down to the next level of 35 out of 70 on RSI scale. That translates into somewhere around like 1250 to 1150. However, if we are going to get like 1% or something crazy bananas like that, it's going to drive a more emotional roller coaster. So breaking this even further down to like, let's say like 1,000, all the way down to like 775, and then the next subsequent level will be 575. So be prepared for that. I'm not saying it will, but if we do not progress from there, and if we see some dramatic aggression from the Feds tomorrow, that's really likely that we'll get there. And on the weekly and monthly though, like we could see that as a very opposite side of the spectrum. Weekly shows that we are bullish out weeks out. Monthly as well, right? But it's a little bit more elongated on the weekly. So weeks out, we should ideally see some buying pressure after we obviously cool down from the volatility from the FOMC meeting. And this is also applicable to Bitcoin as well, right? Been dragged down for quite some time. On the weekly, we're about to form a golden cross. But the daily, you could see that we are about to form a death cross clearly. So coming down to a brick below 20,000, which seems like it's very likely by this point, to 18,500, 17,500, even 15,000, depending on, again, right, how aggressive the Feds will be acting, right? All right, and across all the other coins, obviously some of them are driving by its own micro affectation, but across the spectrum, the altcoins is going to get a little bit more torture in the near term. And on the equity side, I would say it's quite comparable, right? While you can see Coinbase down 10%, which makes sense, right? As we are being dragged down by the overall market. But it seems like the technical is checking out. It is coming together, and yeah, be prepared for the outcome tomorrow. We might get some aggression from Jerome, but I think as we get over it, we do have about a month and a half of cool off until we rebound. All the way to the next FOMC meeting in September, right? Well, appreciate you. Have a good rest of the day, and let me know if you have questions. Okay, take care. Bye.